Morning, everybody. 8:20 a.m. It is December 10th. Welcome to my channel. We have markets are down. ES is flat, but they had actually were gapping down earlier. They're catching a bid right now. For some reason, I don't know. Something came out at 8:20, but yesterday, very interesting market yesterday. Remember, I said yesterday the theme. Well, maybe not the theme. The structure of the market wasn't just getting ripped right back up. It didn't just get ripped right back up yesterday. Hence, why the ES um, kind of was relatively weaker. And usually, it's you don't see it this often. There can be divergences in our market, but usually you don't. Usually they sync up eventually. Yesterday they didn't really. Good morning, Mark. They didn't really sync up yesterday, and I had a couple nice scalps yesterday. And I had like a kind of like an intraday swing position short yesterday that worked out nicely. I'll explain that later. I was actually in my room talking to one of my good friends, and I was explaining to him that I'm going to throw a short on based on the market structure, and gravity should pull the ES down, in which it did. Okay, it's not rocket science. It's actually like you see this pattern happen constantly, and sometimes as a day trader, your risk is not very far away, and you can get stopped out even though you're right where the market ends up, right? Because it's kind of quick, right? Gratification sometimes. But like there's a lot of the times if you know how the market structure works, your risk could be soft. It doesn't have to be so close to your entry as long as you have confidence in the way markets move. Now, of course, there could be news catalysts and stuff like that, but that's basically I was talking about that. Now, back to that divergence yesterday. Usually, when tech, I mean, it wasn't lights out strong, but it was positive off the open. And it was interesting to see the ES just continue to fall apart. Once it hit, you had like four 15-minute candles, which would be an hour of trying to go higher, and it went into a major supply zone. The market just trended lower, right? And because this happened, even internals never got that weak. It was the equal weight. So the overall market was weak. The overall market equal weight was weak. Now, even as I look at my internals, a lot of the sectors were green off the open, except healthcare, industrials, and financials. That's probably why a lot of the equal weight got a little negative. Okay, and we'll get into this. It's just an anomaly yesterday because generally the markets start to sync up, and yesterday the ES just didn't. And you can see it in the internals. Okay, today we have FOMC. All right. Now, lately, the last couple FOMCs, you did have somewhat of a decent maybe move you could trade in the first hour. And then for me, I usually take the rest of the day off because FOMC is just like, I might as well just go to Atlantic City. There's not a lot of edge. It's very volatile. And I'm saying for myself, somebody else might have an edge that plays out over time. But for me, it's just too wild. It's like if I get in it, it's like, am I really sure? Because it's so volatile. And I know this chart's going to look all sorts of messed up after today, even though we know we're getting a cut. Before it was up in question, before there was actually not a good chance of a cut, and now there is. Right? So, with that being said, oh, we have some earnings too. Um, let's see, what was it? Oracle? Did Oracle report yet? Yeah, Oracle reported. Let's see here. No, reports today. The other one is Broadcom. I think they report. Let's see here. They report on the 11th. Pretty pretty heavyweights in the technology sector. Okay. Pretty heavyweights in the technology sector. All right. Now, without further ado, let's get right into it. Welcome to my channel. My name is Steven Gonzalez. I use market profile and volume profile to find structure in the markets along with supply and demand. Gamma exposure levels, the most traded price of the year, the month, the week, and the previous day. All helps me find structure in the market. That is my edge. Okay. I use Anchor VWAPs, market internals, bookmap, and my trusty expected move of the week, the weekly expected move. I run that on a Python script every Monday morning, and I give it to you for free on my Discord. Okay. Now, hopefully, you guys join me every morning as I give you the market story, the market news, the economic calendar, leaders and laggards, and basically the general story of what's going on with these markets, followed by technical analysis in the long and short trade scenarios in the ES and NASDAQ futures. If you want more in-depth coverage, you will join my Discord. Okay. That is Confluence Trading. Go to my YouTube homepage, click on a link, and sign up. What are you waiting for? And there, I've been live, and I just give live commentary, basically what I think's going to happen. And I have a very high degree of certainty of what I feel the market's capable of. Very high degree. All right. And it doesn't mean I'm making money every 2 seconds because I'm right on where the market goes, because you need to have a trade setup. And we all know a trade setup, your risk can get hit and the market could go in the direction you thought, and then you're sitting there like, wow, I was right, but I don't even have money. Right? Some days that happens. Yesterday, I made money. Right? So you just know when, like I said, that's a refinement that every trader has to do. The execution is everything. The analysis is one thing, but the execution is another. Right? All right. So let's get into it. Watch list. Let's see. All right. So let's look at these futures. VIX. We're at 17 VIX. Now that VIX is rising up. All right. We came into the week with it rised up. I don't even know if that's correct English. But because probably some hedging into FOMC. Okay. We know there's a cut, but we don't know what Powell's going to say in the press conference. Okay. Silver's up 1.44. 10-year yield's up 0.41. Ethereum up 0.31. Usually in these types of days, you see a muted market. Okay. Crude up 0.19. ES up 0.09. See, the Dow's up 0.08. I mean, they're flat. Nasdaq's up 0.08. Remember, we were gapping down earlier in the ES. Okay. Russell, it's only down 0.06. Dollar, that is down 0.08. 30-year bonds being sold slightly. Gold down 0.22. And Bitcoin almost down 1%, down to 92. Around the 93K, it seems to be some serious resistance there. Okay, moving on to the Mag 7 Plus. Whoa. I just saw in my time in sales a flash of aggressive selling. Let's see. Amazon up 0.72. Tesla's up 0.46. AMD up 0.40. Nvidia's up 0.29. Looks like Alibaba and ByteDance might buy some chips from Nvidia. Meta's down 0.77. Microsoft's the laggard. I don't know why Microsoft's the laggard. Is there some news here that I don't know about? Maybe we'll find out in a little bit. But Microsoft down 1.15%. I'm trying to figure out where or why that is. Maybe we'll find out in a little bit. All right, moving on to the top sectors here. GE Vernova, my lord. I own that. And every time it pulls back, I think it pulled back to like the 540s. I was like, man, I want to add, but I want a deeper pullback. And this thing is just a monster. They gave an outlook. I think they gave buybacks. They're up 10%. I mean, 10% on a $625 stock. I own this thing, I think, at 280 something. 280. It's crazy. And I keep going, man, I wish my initial position was heavier. It should have been. I actually should have been heavier. But, my lord, that thing. That is a beast. Um, let's look at what else going on. Palantir's up 1.68. PepsiCo, interesting, is up 1.39. Oracle, like I said, reports earnings after the close. The laggard today is mining, down 1.16. Okay, granular list here. Let's look at this leaders here. You got Ally Bank, I believe. AstraZeneca's up 2.29. Warner Brothers with that trying to get bought out by Paramount, Skydance, or the Netflix. All right, Marvel Semi's up. All right, let's look at laggards. That is GameStop, down 5.24%. That meme stock, and really nothing else to talk about there. Okay, we're gonna move on here to sectors. Energy leading the pack. Healthcare up 0.17. Energy was up 0.18. I mean, so you got a little bit of positivity here, but there's nothing, like I said, it's FOMC day. All right, FOMC day. All right, moving on. We're going to look at the economic calendar now. And obviously what I just said. Alrighty. So the 30-year mortgage, look at that, went up 0.01 this morning. Interesting, these employee cost benefits. I mean, that came out at 8:30. I never knew that to move markets, but maybe it did. You got crude inventories coming at 10:30, 2 p.m. FOMC. Previous 4.0 consensus looking for a quarter point cut to 3.75. Then you have the 2:30 press conference. And like I said, I'm usually not trading. Taking a walk or something when this is going on. I might be aware of it, but like it's just wild. Usually get the move tomorrow, like what the market's going to do with this news. And sometimes you just don't know what the market's going to do. You don't know if the dot plot's going to move it, what they said, the voting, or what Powell, how he responds. Don't know. All right, that's that. Let's look at the Jews. Now, a couple things. China mulls NVIDIA chip purchase in emergency talks. ByteDance and Alibaba keen to place large orders for NVIDIA H200 chips. I don't see a Trump thing today. All right. I don't see anything with Trump. All right. I think we can move on from here. Let's go to some stock news. Oracle stock gained 0.2 ahead of quarterly earnings. NVIDIA stock rose 0.2 after Reuters reported the likes of ByteDance and Alibaba have asked the tech giant about buying its powerful H200 AI chip. All right. Cracker Barrel stock slumped 6.9 after the restaurant chain cut its sales outlook. Chewy stock rose 2.8% after the online pet retailer reported third quarter results that exceeded expectations. Here's GE Vernova. Stock surged 10% after the energy giant delivered an upgraded long-term outlook at its 2025 investor update, outlining stronger growth, higher profitability, and an increase in cash generation through 2028. That is a monster. My God, I'm regretting not having more of that. GameStop stock slumped 5.8 after the video game retailer announced downbeat third quarter revenue. JP Morgan stock rose 0.1, rebounding after the bank giant slumped nearly 5% in the previous session after saying it's expected higher expenses next year. All right. Looks like Ferrari stock dropped 2.7, falling to the lowest level in 2 years. All right. Let's look at more news. Fed expected to cut rates but may signal a coming pause. Amazon to invest over 35 billion in India on AI. Intel loses challenge against EU antitrust ruling but wins reduced fine. Let's see here if there's anything in here. I want to see the Microsoft. Why that's all right. Moving on here. Let's just look at upgrades, downgrades. Maybe there's something in here that I'm not aware of. Let's look at upgrades today. AbbVie upgrade. GEV Vernova upgrades. We got Blue Owl Capital upgraded. All right. Let's look at downgrades. Downgrades would be Ferrari. Okay. Alrighty. I think we're done here. Let's move on. Let's move on to our market internals, and you can really see what I was talking about earlier. Really see it. The clear difference here. All right. So, if you just look at the market, right? Right here. Well, I could shrink this down to show the day, right? If you really look at this, right? Market moved up, had problems, came down, and then trended lower, right? Well, all was good in the beginning of the market, right? And then right around here, notice this white line. That's equal weight. That's the overall market, okay? That's the S&P 500 as if all stocks were equal. They weren't cap weighted. That just started to drive lower. And now you saw it brought market cap lower, but market cap never got weak because communications, discretionary, and infotech were positive. But the equal weight was just trending lower. In such a big divergence, it was able to pull market cap down. Now, if these were negative in red, oh, this day would have been a big down day. That's a big divergence. I don't think I've seen a divergence like that, like that wide of a divergence in a while. I don't recall it being that wide. Okay. So, you know, I had some nice trades, right? Scalping. And then I had a swing trade here. Well, intraday swing, where I entered around, I think around, let's see where I entered. I think I entered, let's say it was equal to probably around here somewhere, with a stop here, and then I just took it off. Literally, I was getting my daughter from the bus, and I literally was like, all right, it pretty much hit my target. Now I had a longer target, but I didn't trust the overnight, and it would have hit my next target, but I took it off. All right, so that's internals. All right, now everything reading here was pretty benign, so I knew we weren't going to go dropping out of the sky. All right, now let's move on to daily charts. Okay, we just been in balance. This market's just been ranging every day. You know, I caught that move. Uh, I caught that move in the market, and if I had a day trade, like a more tighter stop, I would have probably got stopped. But that's the brute beauty, right? If you're like understand how the market actually moves, And generally, what usually happens, you can have a stop that's wider, and then just let the market do its thing, right? Because you're not on every tick and in every minute, and every 5 minutes going, oh my God, it's going to hit my stop, right? And that's the way I got to look at the market sometimes when I feel like this is what should happen. And a lot of times it happens, and then I'm like, wow, maybe that wasn't a day trade. That was more of like a swing, right? Let's look at the SPY. All right, so you had this. Now, it's very important, okay? Why does this SPY look different than the other day here? Let's see here. Um, Very important here. All right, we had this range, right? And you had this. Now, I said, could this be a swing high? Could this be a swing high in the markets? Maybe. All right, can this be a swing high where we start to take a move lower? Now, look at that candle here. You can see, right? We came up basically to Friday's close, last month's highs, and then just had a trending day downside, down to the downside. I mean, again, I understand that all day you trend it lower, but pretty much for the last, let's see here, from 12:30 or 12 o'clock on, from noon on to the end of the market, you just trend it lower in the ES, okay? In the ES. So let's see what happens here. Now, where are we now? 683.10s. We are right here, pretty much flat, waiting for FOMC. Now, I believe there'll be something that happens, possibly tradable today, okay? But we're just in this range. But this could be a swing high. Now, today can erase all that. We could go up, down, and up. It probably will. It generally happens. Let's look at futures. Okay, look at this range. That's why, like, if you trade intraday, you don't get much follow through. A lot. It's like choppy. You'll get a little bit of a move, and you think, "Ooh, this could go higher," and then it reverses. Oh, wait a minute, we can go lower, and then it gets bought. That's what's really happening. Okay, and this daily supply right here finally got taken out, but you have another daily supply right behind it. So we'll have to see. If that's a swing high, I don't know. Remember, there's still inverse head and shoulders. That's still here. And like I said, today might be the day that you need, if you complete that inverse, right? Because you got the left shoulder here, right? You got the right shoulder, needs like you got the head. And then if we pulled it back to the 50-day moving average today, let's just, and this is what sucks about it, is that this could happen, but on an FOMC day. And then it's like, I don't want to trade the FOMC because it's so wild, but we might get a push temporarily down to this 50-day and 20-day. That would complete the right shoulder. And then you have this neckline here at the 69.05s. All right. We'll have to see. And a lot of times this is what happens, right? So, like I said, I don't know what's going to happen, but watch that happen. And then it makes you be like, all right, that might have sold off violently, and you're like, oh, and it's not like a setup you want on an FOMC day. I mean, can you take it? You can. All right, now let's look at the Qs. Qs is relatively stronger yesterday. Okay, let's look at these Qs. Now notice, the market opened here, right? Pushed down, then got bought up, hit Friday's close. That's that black line. That was the resistance, right? Friday's close. You have two equal highs up here at 629s. Okay, you still have not filled the gap. Okay. Let's see what happens, right? And what are we at now? 624.70. 624.70. You're right here. You're pretty much a buy yesterday's close. Okay. So we have to see. Let's look at futures here. Just look at this. I mean, look at this, boy. This range here, right? That's what we're doing. That is not any conviction from that market. Look what we're doing. Every time we come in here, you get a wick. You get a wick. You get a wick. Get a wick. Get a wick. Not a high convicted market. Okay. We hit close to the 9 EMA daily yesterday. Now, did I not point that out? Because I thought we hit that yesterday in QQQ. Let me see if I want to make sure we did. Yep. Well, not to the tick. We didn't. But almost did. Okay, so go back to futures. Okay, really not showing us anything. It's in FOMC's coming. That even makes more sense. Just going to be muted until 2 o'clock. But like I said, trade can happen. Definitely a trade can happen. Okay, now let's look at that RSP. Remember, that's the equal weight. That's the ETF for an equal weight. Check that out. That's what the RSP did yesterday. Boom. Right? Opened up here, made a move up, and just got pancaked. So like an inverse hammer, right? It's a pretty bearish candle for equal weight. Okay, can this be the swing high? That's all-time highs actually in the RSP. Okay, is that? Yeah. All right, let's look at the breadth. Let's smell that breadth of the market here, and that is your 50-day moving average and how much percent we are above it. Look what we came up to, almost 60% at one time. We are down degrading again. We are back to 47% of stocks in the S&P 500 over their 50-day simple moving average. Okay, that's getting weaker. So the breadth, that makes sense because overall breadth will go with RSP usually. Got weaker. Let's see. Let's see what happens here. We're not at any extreme levels. It's just the breadth. And that makes sense where the breadth is kind of middling. Why our market's kind of chopping up, chopping down. No really continuation, right? No continuation. All right. Moving on. I think we're ready for those hourlies. All right. And this is where I can show you basically what I was trying to show one of my good friends yesterday about liquidity sweeps and equal highs and lows. All right. Hopefully, this is hourly charts. Hopefully it makes sense. I feel like I do a good job of explaining, but if anybody has questions, let me know. Now, ultimate balance has changed slightly. Still an ultimate balance here. Most traded price of the week is around 68.55. Let's say most traded price of the month is 68.45, 46s. So ultimate balance here. Most traded price of the month and the week. Okay, that's the fairest price to do business in our markets. And we're right on an FOMC day, which doesn't shock me because guess what? You can get a big move up or a big move down. You're guaranteed a big move. That's the beauty of it. Okay, that is the beauty of it. Now, of course, on this chart, people could even say you see a head and shoulders, all right, with the neckline here. So now we're in ultimate balance. Today, FOMC is nuts, so we're going to bounce around. We're going to be violent. So there's not much TA for that. But what I wanted to show you, okay, is how our market's been moving. How our market's been moving, okay? And show you what the market has been repeating over and over again, okay? So I'll start here, okay? Notice these equal highs. This is an hourly chart, right? And then what happens is this is a liquidity sweep right here. Now, generally, what you want to do is you want to see it close back inside this range. That would be bearish, right? It actually closed here, right? And then it made some equal lows. And really what tends to happen when this happens is this becomes a discount when you go back up into this range. Okay? And look what happens again. Equal highs, liquidity sweep, close back in the range, and look what you do. You take out these equal lows, and you get another liquidity sweep. Right? Took out the equal lows, closed back in the range, right? Went back to these equal highs, came up here, right? What did you do here? You swept that liquidity up here, closed back here, right? Right? Close back here, push down, right? Created these equal lows, right? And then got bought up, and look what happened. Sweep the liquidity of these equal highs here, closed in this candle. Then when you got the discount, what did you do? Woo, took out those equal lows, right? And the process just repeats over and over again. So yesterday, when I was pointing out to my good friend, I was like, you have equal highs here. I was telling him, and a major supply here. And what I was saying to him is, hey, if we sweep these highs, take out the liquidity, right? And I said, there's equal lows here. I said, we should take those out and possibly take out these equal lows. Because we swept liquidity, it closed back inside the range. And then gravity takes control. Because when you sweep the liquidity, right, and you go up, sweep, that basically is taking out, stops are here, longs from here take profits here, which they become sellers, and then new sellers come in, right? And these longs have taken profit. And so what happens is once you push back into range, new sellers join, and any longs left start to liquidate. So look what just happened. Look, and this is hourly. Just trend it lower, hit the equal lows, hit my target right at the market close, pretty much. Well, the close is here, but right towards the market close. And then I said to myself, this could hit this level here still because of gravity. And look what happened. We bounced in the overnights, right? Bounced in the overnights. And then what did we do? We swept that liquidity. So what should we do now? We just swept these equal lows, right? And we're back. We closed back inside this range. Okay? The next move, right? You swept the liquidity. The next move, regardless of what you're seeing in the price action, how it's going to look, should eventually make itself up and hit these equal highs. If that's the way the market's been moving. Okay? That's the way the market's been moving. Now, it's FOMC. So I don't know if we'll get that move before FOMC. But if we do, remember I said this. And again, this is a pushed out view. This is not a day trade. This could be an intraday swing trade. Okay? So let's talk about that for a sec. So if I was going to want to trade this, right, because now we swept liquidity, we close back in the range, right, we should You'd like to see this swing high taken out, and then we should hit this, right? Because now sellers, boom, probably took profits. Buyers, they became buyers with their stops, and now buyers can step back in. Okay, so I would like to get a discount. So if I can get an entry somewhere in here, or maybe like here, like it's right there right now. So let's say we move up and we push back down. That's probably a good entry. And my target would be the equal highs here, around the 68. What would that be? 68.72s. 68.72s. Okay? I'm just mentioning that because that happens over and over again. It's uncanny. The market loves those equal highs. And then it takes the liquidity and then it gives you the shot to go higher. Gives you the shot to go lower, right? But you got to wait for that close back inside the range, okay? Because we have a choppy market. Now, hopefully, that makes sense. And maybe there's no one even watching. But I think that's a golden nugget, okay? I think that's a golden nugget, okay? It happens in every market, okay? It happens in every market. So we have equal lows here that have not been taken out in your NASDAQ. That's around the 25566s. Okay. We'll have to see. We have to see. 256. Now, actually, finally, the 257s have become the most traded price of the week, and the 256s are still the most traded price of the month. Okay. We have some supplies here. Like I said, we're definitely in the middle of a range here. So, not great location right now. I don't know how much of a move we make, but if we do make one, you can see here, you got a nice equal resistance here. Okay, that has been clear resistance. This has been clear support. So, look at that wick here, right? Struggling at the most traded price of the week and the most traded price of yesterday. Okay, you broke this low, right? Tried to go up higher again, and look, you kind of swept this swing high. So if gravity takes control again, okay, see the Nasdaq and the ES are just on different trajectories. It's kind of like different. They're just different charts right now. This looks more bearish. You haven't swept any liquidity lower, right? So maybe you do this today. Nice supply zones here, and you could take out these lows, and then I would think you take out these equal lows down here, and maybe sweep that liquidity of that demand zone, and then by the end of the day you probably can go back this way and maybe take out this supply on an FOMC. Okay, I don't know. That's what I'm seeing. Okay, so ultimate balance in both markets. Yesterday was relatively strong. This morning, well, it is the relatively weak market because of Microsoft. Like I said, I still don't know why Microsoft is down. Matter of fact, let's look at that. Let me just do this one quick session here. Here we go. Let's look at the use the news thing. I like looking at this. Let's look at pre-market movers. Let's see if we go down to the negatives here. If Microsoft's there. And maybe there's some news here that I'm not aware of. Here's Microsoft. Let's see. Let's see what Microsoft's down. Okay, it says Adobe launches creative productivity apps on OpenAI's ChatGPT. Okay, and this is for Microsoft. Let's see how this makes sense here. Adobe said Wednesday it has launched its Photoshop, Express, and and Acrobat apps inside. Oh, okay. Inside Microsoft-backed OpenAI's ChatGPT, expanding access to its creative and productivity tools on the conversational AI platform. The integration allows ChatGPT users to edit images, create designs, and transform documents directly without leaving the platform. That the company said. Tools are available for free. The ChatGPT users on desktop. Interesting. Maybe I'm not smart enough to realize that that's bad for Microsoft. Um, Maybe I'm just not smart enough to figure that out. Why that could be negative for Microsoft. Trying to think of that, but that's the reason. I'm assuming. Let's look at. Let me see something else here. Let's see market chatter. Let's see if there's something in here. No, nothing there. I just thought there might be another reason here because I'm like, all right. I mean, that's probably the reason, but less subscriptions to what though? Microsoft is down, not Adobe. You see what I'm saying? Yeah, but that's to Adobe. Microsoft is down. So, I mean, Adobe, yeah. I mean, because you're getting their thing for free if you go to ChatGPT. But I don't, like I said, maybe there's something else that I'm not aware of. That why Microsoft is down. I mean, they're down 1.59%. So, I'm trying to think. I don't really know. So, oh, but you are here. Documents, MPH. Let's see here. Let's move on. Let's move on. Yo, did you happen to catch? I know I texted you that liquidity sweep that I just talked about. I don't even know when you got on, but hopefully you saw that. All right, let's look at the. All right, let's go to the market profile. Let's go. All right, this is the market profile, volume profile. Alrighty, price is right here. You're actually at yesterday's lows right now. Okay, in the ES. Ultimate balance, we know that's ultimate balance. Okay, we know we're pretty much just in range. All right. Now, we did leave the auction yesterday with a poor high. That typically always gets corrected. I was actually looking long, and my boy here, Documents, can attest to that. I was like, ooh, I'd love a pullback long, which I did get into one, and I was up. It pulled back, and I was like, ooh, I'm long. And the market started to get weaker, and I went to break even, luckily, and I had a nice excursion. All right, but that generally gets fixed. That's poor structure. Okay, and Documents can attest. I said, hey, this supply zone is very powerful. I think it's a 12-hour. So I said, I want to see what react. And look at that. It literally tipped its toenail in it, and it just sold off from there. Could not break that supply. Okay. Now, so where are we now? We're here. We're at yesterday's lows. You could see the sheer amount of volume right here. Right? Your most traded price of the month. Okay. In the overnight. Now, this was the equal low that I was targeting if the market fell there yesterday, it hit it in the overnight. So that was expected. I just took mine off literally by the close because I was like, you know what? I don't know how we'll open up overnight. So now we have a poor high in the overnight as well. I think if this market continues to accept value under here, you might want to push one more time lower. You do have equal lows down here at the 68, 18, 17s over here. Okay? Maybe. Maybe. This swept this a little bit. So, like, uh, I don't know. We'll have to see. But this, I would say, even this now that I'm seeing this, it's not up here. This is looking like we probably want lower. And don't get me wrong, I think we could do one of these. Whoop, and end up right here, 2 p.m. Very possible. Very, very possible. Okay. We are gapping down slightly right now. There's yesterday's lows. Okay. So we have supply here. Inside ultimate balance, there's a stack supply zones here. Okay. We have our poor high right here from yesterday. I'm going to tell you right now, that's going to get broken today after FOMC. Regardless of what happens, I could almost guarantee that will be broken. But it doesn't matter. I'm not going to trade it. But so this supply right here. Okay. What I think should happen today, now that I'm looking at it on this is my preferred way to look at the market. So you do have a big, heavy supply zone. I mean, demand zone, I'm sorry, right here. Inside it, you have another stack demand. That's not as powerful. Okay. I could see us making a push down here. I really can now when I'm looking at it. Okay. There's an unfilled gap down here. I don't know if we hit that. There's last week's lows. Okay. Even if you look at the last week's range, right? That's the highs from last week. That's the lows. We're just inside that range. Makes sense, right? Now, how do we formulate a plan here? We'll do it right here. And we'll break out the session. All right. Let's start off with the bear side. I'm going to start off with the bear side again. Okay. Stack supply right above us in ultimate balance. Now, ultimate balance is becoming, this is where it could become a big, thick resistance area. Okay. Now we're pushing down. Now we're gapping down a little bit. So all I want to see is, now I would not prefer a gap and go because I don't like to trade that. I don't have a lot of confidence in that. What I would like, even if we push down a little bit, maybe we tap that demand. I would like a pullback into this supply zone, into the most traded price of the month. Remember, you have a swing high here. So I would like to see what we do in here. How do we act? Do we make lower highs? Because if we do, and we start to come down, okay, these longs are in trouble. And I think these equal lows over here, the 68.18s, might need to get swept. So gravity will take place. Okay, gravity will take place. And we'll come into here, and I think we sweep that. And I think once we do that, I don't know if we reach last week's lows. I think we do one of these, and then you can start to de-risk, and we push back up into the middle, back up into ultimate balance. Because you don't want to hold the bag, all right, when FOMC is coming, because it is violent. There's not a lot of TA with FOMC. It whips back and forth through ranges, through technical ranges. It just like whips, okay? It doesn't abide by any really rules. That's why it doesn't matter. I'm only talking right now for the first hour of the market, okay? That's what I feel could really happen here. Now, the other thing you could get here is you get a little bull trap. If the market was to move up and push up through this supply, again, I would need to see it find acceptance above ultimate balance. If it went like this, came back lower high, yeah, now you can get a move too. I prefer not to do that. Okay. Short, long side. Let's do longs. Remember, this is only for about the first hour and change of the markets, and then it's gone. Okay. Unless there's something that happens or whatever that I'm like, ooh, good volatility. Okay. Let's go for longs now. All right. I'm not crazy about longs in here at all. That's ultimate balance. Just get ready to get chopped up. Death by 1,000 cuts. I don't want to be in there for long. Okay. But what might happen is if we get a gap and a go here, it's a small gap, and we go into double demand here. Okay. I know the market probably wants those 68 18s, and we're probably going to go down to here, just like I showed before. Maybe even creep into this demand. If you get that higher low, like this, and we're later in the day, let's say it's 11, I think you start to make yourself back up into ultimate balance. Okay, that would be the de-risk long. Don't hold the bag before FOMC. Who does that? Probably nobody. That I'm just going to stay short? No, you're not. You're not going to do it. Shorts are going to take the profits here and go, all right, cool. Longs will step in and go, all right, we're probably going to chop in this area again for FOMC. Now, if the market makes it through this supply zones and makes it through and tries to establish, I don't know if I like that long. It could work, but I don't really like it that much. Okay, don't get me wrong. Scalp on a couple of points here and there. That's not about the story, right? But that might be available. But as far as me being confident of a long, not really. That's your ES. Let's go to the NASDAQ. NASDAQ has these equal lows that, oh boy, that's just looking like it wants to break them. Okay, that's really looking like it wants to break them. Okay, and look at that beautiful profile. Look at that beautiful profile. If I wanted to get a tattoo of a profile and be like, yo, I'm all about profile, there's your bell curve. There's your bell curve. All right, that's just showing you balance. That's just showing you balance. And the Nasdaq's really just giving you levels here. All right, you got a overnight high and yesterday's high, and the overnight highs here, you're just begging to break that. And that lines up with these supply zones, right? And the most traded price of the week. Really, the Nasdaq's giving us beautiful levels. Okay, you have a demand zone here, and look what this demand zone encapsulates. Most traded price of the month, 256s. I'm sorry, 256s. Look at this level. Just a beautiful level. Okay, equal lows here, 2556s, 25563s, right here, begging to get broke. This level, 25746, begging to get broke. We're going to test one of those, I believe, before noon. All right? Now, very different market in the NASDAQ. You're in the middle of yesterday. Remember, ES is gapping down. Slightly. NASDAQ's in the middle of yesterday. Very balanced profile. You do have stacked supply. Okay, we are in ultimate balance right here in the middle of this crap. That's really not the best location right now. It's a really horrible location in the middle of yesterday. In the middle of ultimate balance, no thank you. Okay, no thank you. Major supply up here. Okay, major demand all the way down here. You also have equal lows, 25430s around right here, that line. Okay. I don't know if we go down there, but I can tell you one thing. You want to be active here. You want to be active here. And you want to be active if we go down here, not in here. Okay? Not in there. Therein lies indecision. Therein lies the battle. You don't want to be in the middle of the battle. I want to be on the edges, right? That's where most people's stops are. That's where most people's targets are. Join the masses. Otherwise, if you're trading in here, like I said, scalp a couple of points, whatever. You're not going to get big moves. It just doesn't work like that. This is where congestion happens. This is where traffic is. Okay? The edges are where everybody sees those levels. I'm not a rocket scientist by these levels. I know everybody sees them though, right? So let's get into it. Let's get into it. Let's break it out here. All right. So we're going to start off with the bear side again. I don't even know if I did this. We're going to put these scenarios up there. Let's go bear side. Oh, these equal lows are begging to get broken. All right. So now, in the middle of yesterday, not a fan of that. What I want to see, even if we dip down into this demand zone, push back up 257s. I love that even number for yesterday's most traded price and the most traded price of the week now. And supply in a stacked supply zone. So, I want to see what the market does here. It could fail, right? Get some lower highs. Now, we take out the overnight lows. We're going to go. Now, 256 is a monster. I know my boy in here, documents knows 256, 256, 256. Okay? But there's the weak low. There's the confluence low. 25563s. 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 Those are the equal lows that the market wants. And again, I don't know how far you take the liquidity. Okay? That will be judged by me, by internals, by how the market was weak. That I will determine for myself to be like, okay, it should push through them and sustain it. There's a sweep. You're going to get it. You are going to get the sweep. It's just a matter of, does the market have more fuel? Because the next level you're going to get after is the 25430s in this major demand area. And that might be it. That might be the bounce. Okay? Now remember, this is ultimate balance. A move past 256, which you haven't really done yet, should get the ball rolling. And then you de-risk. Okay? Now you're getting some weakness here. You got lower high, lower high, lower high in a 30-minute chart, right? You got overnight lows here. This area again, let's put a little yellow here. This is your area. And let me make this clear. This is your area in between here where you don't really want to initiate a trade. Okay? You want your trade to work for you in this area. Okay? I don't want to enter here. You are going to get chopped. Okay? Meaning if you want a longer move. This is an area where it's going to probably do a little game until it figures out what it wants to do. That's why the edges is going to tell you that. Okay? So, back to the short scenarios. Another thing, what I'd want the market to do, let's say it looks like, oh, you're breaking 257s. Well, I know there's a big resistance here. I still want to see. Prove to me, market. Even if you have to hit this major supply zone, still you get lower high. And then I'm like, uh-oh, okay. We might just go back to the other side. I want the market to prove to me it's strong. If it can't, we're going to roll back over. Now, I'm not saying that that's optimal. I'd probably want this more. Failure here. Okay? Let's go to longs. Same kind of feeling with this market. Okay? Same kind of feeling. Ooh. I'm running late today, boy. All right. So, same kind of feeling. All right. For longs. I'm really running late today. All right. So, longs. My long is definitely going to be I want to push down through 256s, break the 2563s that equal low, lose the 256s. Now, what might need to happen, you go into this major demand zone about the 255s. If I see we rise up, put a higher low in, and start to go accept and like have an hourly candle close inside that range, you're going to go back inside the mean for FOMC. Now you might go deeper into this demand, 25450s. This is an equal low level as well. You might sweep that and just make sure you close up in here, get a lower high. You're going to rip back to the mean, to ultimate balance, because you're not going to want to hold the bag in FOMC. Okay? That's it for me today, folks. Gave some golden nuggets there. Smash that like button. Help my channel out. That would mean a lot to me. All right. Now, every morning I do this. I give you the market story. Hope you can subscribe, set that alert. Give you the market news, economic calendar, the leaders and the laggards. Just gave you short and long scenarios in the NASDAQ and ES futures. Gave you liquidity sweep on the hourly charts. All right. I am not expecting a ton. I know it's FOMC, but I feel like we are going to get some meaningful move that you can either de-risk or follow the first sell-off. All right. Now, want to join me? I'll be live today in my Discord. That's Confluence Trading. Go to YouTube homepage, click on the link, and sign up. What are you waiting for? Let me be your indicator. You will hear me live say, I don't think we have much juice left. I don't think the market doesn't support a big move. You'll hear all of that. Okay, 9:45, just like documents saying. 9:45, I'll be live. All right, and I'll just comment. Right, my narrative. I do a lot better for myself, to be honest with you, when I'm live and talking, because it's like I hear myself talk on my own indicator, saying like, "Oh, I've seen this before." I know documents can attest to it. When you hear me start to get confidence in saying what we should do, this is probably what we should do, that's where I start to feel like a setup is coming for me. Instead of just going, I'm short. I think we might move a little lower. Nope, that doesn't. I know what I see something and have conviction. It's not like I don't know. I really don't know. No one ever really knows. But if you have to have a high conviction on something I've seen before, like a movie, like, oh, I've seen this movie before, I've seen this pattern before, this is what generally happens. Well, does it always happen? No. But the chances of happening are highly likely. And that's when you should put your money or you put your risk out, capital, okay? Now, everybody have a great day. Stay green. If you want to come in the room, please join me live, ask questions. I'll be more than happy to answer them, all right? And if I don't see you, I'll see you tomorrow morning. All right, take it easy.